Markets had a great looking rebound last week, but the Friday bar, that's got me a little bit concerned. We came right into the all-time high and backed off into the close, starting what could be just a classic double top, and I'm sure that's got the bears salivating. However, positioning is still not at extreme levels of net long, and the COT data commitment of traders still indicates that large speculators, they're less short, but overall, they're still net short, kind of insane. And it seems with NVIDIA earnings in the rearview mirror and the kickoff of summer with Memorial Day weekend, markets may slow down, but let's not just automatically make that assumption. There's more news over the weekend that shows progress on Iran talks, which as we know, softens interest rates and thus is bullish for markets. So welcome back to the Trade Brigade Weekend Show, where we'll take a look through all of the data points and we'll build a logical trade plan. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description, and stay tuned until the end of today's show. I've got 7 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off on the SPY weekly time frame talking about candle structure and location as we always do. In terms of structure last week, we're left with almost the opposite of the previous week's bar. It's a green-bodied hammer, which as we know represents that buyers stepped up in the lower wick and they were able to push prices back up to the opening print. The difference here is that we have a green-bodied bar. So we moved through the opening print for range expansion back in the upward direction, and the buyers were able to close pretty firmly up in the upper third of the weekly range. There's very little upper wick. We'll talk about that on the daily chart in just a moment, that Friday bar of course, but for the most part the weekly look here is absolutely bullish. On the bar to bar count, we made a slightly lower low. I would just call that an equal low for all intents and purposes, and we have a slightly lower high. So if we want to call this an inside bar on the bar to bar count, that's also technically bullish. If we had stronger sellers, we really should have seen a pressure point at the previous week's low, if not a breakdown underneath it for a pullback to begin on the weekly time scale, and that just did not happen. So buyers go 2 for 2 on the bar to bar count. The overall trend remains in the upward direction. This is a brand new all-time high close on the weekly time scale. And I would certainly argue that there's really 3 outcomes that can happen here, all of which remain bullish on the weekly time scale. Out of a balance range, basically an inside bar, right? We can either Brigade bolt into blue sky territories, bullish there. We continue to consolidate sideways, awesome, this is a bull flag at the highs. We break underneath the 2-week equal low, awesome, we pull back, and what are we looking at? Well, as we just said, this is the highest high. It's a brand new all-time high close on the weekly. It's the highest high of the trend count, and as we described last week, there's this higher low in here around 712.40, and there's this higher low here at the previous all-time high retest. So even if the weekly chart were to take out the 2-week equal low, I think you could find a weekly higher low in the trend count that looks like that, something that looks like this, and then a reclaim here would be bullish as well, and you're still dealing with a higher low opportunity on the highest time frames. As we know, the weekly 20 SMA here in orange will play catch up over time. With this level, that's 698, roughly 700, the previous all-time high retest. As we know, if we break out the Fibonacci's, pulling in from the low up to the highs in here, we did not set a new high, so this is unchanged. The Fib 38.2 is kind of in between those 2 key structural reference points at this point in time. That's 703.75. Generally, I'm still a bull on the weekly time scale as long as we're above 700, 698. I do not see any problems here with the weekly chart. Now, if you want to get a little bit cute and fancy with it, you could say, well, I'm looking for a look above and fail, in which case then we pull back to the 2-week equal low, then we break the 2-week equal low. Like, that's fine, but that doesn't actually change the weekly trend, right? So you could look to, sort of find a short entry up here, and you would want to use a more nuanced time frame, probably the daily or below. But let's not forget that the overall trend will remain in the upward direction. Let's throw on the weekly anchored VWAPs just to point out that this is now above the previous all-time high test and will slowly, over the course of the next couple of weeks, probably make better sense at the 712.40 level, which we'll see on the daily chart. And it's probably not going to happen in the blink of an eye, but these do have an upward trajectory. And as long as they continue higher over time, who knows? Maybe it'll be close to about 700 when the time is relevant. Let's throw on the volume profile because we will be building out a little bit of a higher volume node now at the highs, just pointing out that this shelf is once again the 2-week equal low. So if we take out 731, 732.25, I think was the level we have on the daily chart. We'll see it in a second. If we take that out, sure, a pullback may develop and you can actively trade shorts there, but it does not change the weekly trend. That is the main illustration here. Let's drop it on down to the daily time scale. Let's see what's going on from this perspective here, and we'll of course start with our weekly expected move. If you're not familiar with this study, it's the gray shaded area right here. You can check out the video tutorial in the top right hand corner on how to set this one up. If we're contained by the upper bound, the number is 756.96, implying a brand new all-time high and a new higher high in the trend count. That is bullish. If we're contained by the lower bound, the number is at 734.32, and that of course is a very very nuanced higher low versus last week's low and the previous week's low as well. It does start to align again with the daily 20 SMA in orange here also. So as of right now, I would say the expected move is bullish. Now, in terms of the daily trend count, as we described in the Wednesday midweek market update, this is now a firm higher low because of the way that the hourly trend flipped down in this it's like a 3-day pullback there from Friday of 2 weeks ago, Monday, Tuesday of last week. So this is a firm higher low, which means now that we've set an equal high, we really can't afford to break down underneath this. Otherwise, as mentioned in the intro, we really just start triggering what? Classic double top. And then we probably look for, that's a bit of an aggressive move. Let me actually come back in here. Let's say this is the classic double top. We come into the neckline, maybe we bounce lower, high, whatever, we break. My first thought would be for a gap fill reversal. Does the market come back up and test that? The most bullish outcome would be here, a reclaim. If we reject that, that's where I would start thinking of that weekly higher low, which is available over 712.40 as described. And that would be a retest of this breakout point from back here towards the end of April, right? So the daily path, if this is going to ultimately become a double top, again, that's not my base case. I'll talk about the base case in just a second. But if the base case, if we deteriorate from the base case into a double top, that's kind of how I see this unfolding from that area there. And once again, the premise here, and what I really think the main takeaway is just that this is a firm higher low as mentioned. The hourly trend did satisfy those conditions. So with the equal high up here and Friday's bar suggesting an inverted hammer, kind of a weak close, what would be a slightly better outcome? Well, I think that you can either consolidate here, because keep in mind that Friday, technically, we gapped up, and for the most part, on the bar-to-bar count, higher low over the previous bar's range, certainly a higher high on the intraday. Again, the close wasn't really all that compelling, but sideways consolidation here, sort of a look below and fail that keeps us in here. As a matter of fact, let's just drop it down to the hourly chart so we could see this with a little bit more detail. Let's get granular with our pathing ideas, shall we? So you could call this like an hourly balance at this point. I would be more fond of calling this hourly lows, higher lows, and potentially just seeking hourly continued higher lows over 743.50, right? So once again, you could come in here, you could balance, you could look below and fail. That's fine. You reclaim the level. It's really the Thursday high inflection point. As long as we're above that, I would retarget the all-time high. Maybe we tighten up with a new arbitrary higher low on the hourly. We would have to see what the price structure looks like early on this upcoming week. Then, of course, Brigade bolts out to new highs. That's the most bullish outcome, right? Of course, this flies as well. There's some pathing there. If we take out that Thursday high and rotate here, I would still be optimistic about the potential for a very nuanced daily higher low. I mean, if you haven't really caught on by now, right, the main idea here in markets is to continue buying higher low pullbacks until it doesn't work, right? That is it. And you'll know it's not working when and if price is down here and potentially threatening to break underneath something like that 732.25 line in the sand from the weekly, the daily, everything we just talked about, right? So if we're under that, yeah, obviously it's not working. And once again, just to be clear, because I don't know the varying levels of understanding, but this does not mean if there's a solid red-bodied bar that looks like this, you're just resting a limit order here looking to get filled. It means if we start to see compelling price action and evidence that suggests buyers are stepping up here and we can manage risk against this level, great, entry, stop, rotate back to the highs, risk, reward, right? But if it's just red-bodied bar after red-bodied bar, if it's something that looks like this, boom, we break this first support, boom, we break the second support, there's really no entry point there, right? So we're gauging whether or not buyers step up. 743.50, 738.15, those are the higher low spots. Once again, your simplified pathing, then we'll hit it with some VWAPs, Fibonacci's, the whole 9 yards. Quick consolidation, look below and fail, back to the high. Consolidate here, great, Brigade bolt into blue sky territories. If you can get this, awesome, fantastic, blue sky territories, upper bound of the weekly expected move, base case. If this turns into a failure pattern, let's say we come back down underneath, how do I want to draw this? So sear these in as like base case, most bullish outcomes. If the market looks above and fails like that, now you have a temporary hourly head and shoulders, reverses to here, you could probably short that from, let's say, A to B. And then at point B, I would put my thinking cap on and say, do we have buyers? Great, it's still an hourly higher low because we're coming from the highest high, correct? Highest high, this is a higher low. And then, right, looking for this continuation. If this does this, okay, different story. Right now, all of a sudden, we're a little bit more pullback buy is not really working as well. Are we going to threaten this? If we break underneath the daily neckline, right now we start to change our tone a little bit more meaningfully. So I think the levels here are very, very straightforward. Like there's nothing like very hidden or secretive about this chart. You just have to be prepared for those outcomes. Either look above and go, right? If market internals are bullish and supporting evidence is bullish, awesome, we go with. If it turns into a failure, breath's deteriorating, market internals look weak, okay, maybe you could try a counter trend trend short there as long as there's a decent way to manage your risk. Maybe you get inverted hammer here, stop over the high, short the low, and then your target's here, right? So your risk reward now turns into this. That's a very reasonable thing to do as long as you're someone who can respect the stop, because ultimately trying to short a incredibly strong bullish market here, probably not the best idea. If you're someone who breaks your rules and you're not very good at following your stops and you're short, and then this thing just continues to grind higher, you're going to get steamrolled. That's not the trade for you. Okay, so just understand any shorts in this environment are counter trend. Longs trying to buy pullbacks into key supports are with trend, and that probably has a higher probability of success. Let's drop in a Fibonacci from this major low up to this high, on the hourly at least. That's the all-time high. And you'll just sort of see here that once again, your fibs are confirming both of the levels. If you pull back here, hold the fib 38.2, how do we call this anything other than just bull flag consolidation on the hourly here? If you pull back a little bit deeper than that, your saving grace is always the 61.8. Ideally, we'd bounce off of it, reclaim here, and then we're good to go. I would say one of the problematic outcomes you could look for, throw a bone to the bears, so to speak, let's say this does just back off, we're here, then we set an hourly lower high underneath. Kind of problematic when and if you drop the 61.8, then you're looking for the equal low, right? More time that's spent underneath the 61.8, especially after an hourly lower high, would increase the odds that you go here. Is that a base case? Once again, probably not. Let's clear this up. Let's throw on the anchored view apps from an intraday perspective. And what do we see here? The main anchored view app that I think we should pay attention to, yeah, you've got your pullback low here, but it's the all-time high anchored view app. As long as we're above that, I really don't think sellers have two legs to stand on. And for the most part, pullback longs are the name of the game. Notice that this entire stack early on in the week should start to provide confluence around that 743.50. It could be Tuesday afternoon. It could be Wednesday morning. Remember, markets are, of course, closed on Monday for Memorial Day. So that's what we've got on the supporting evidence on the spiders themselves. I'm just going to come in here one last time with the base case pathing. That way, nobody is confused. What do I want here? This study set is fine. Base case pathing. Nobody should be confused. What are we thinking about? Most bullish outcome, plus with the Iran news, wouldn't be unreasonable if rates are down, bonds are up, technically to start the week. Brigade bolt here, blue sky breakout, continuation, right? This is about a week sideways, 2 weeks sideways. A breakout there is just a classic daily bull flag. We could take a measured move extension actually in just a second. I'll go back to the daily. That's a base case. If we open in range and we just kind of like, oops, we don't want a rectangle, we want the freeform. There we go. We do something that looks like this. That's a higher low pullback off of Thursday's high. Retarget the all-time high. Consolidation is probably over some sort of a new level that's set. We'll have to see what that is on Tuesday. Then a Brigade bolt follow through here once again is a daily bull flag breakout. Problems emerge, and I would say, a more reasonable thing to happen could be the look above and fail. So I'm going to use a dotted line. We come into here. We're still looking for a pullback long off of 743.50. Remember, we've talked about this like ad nauseum. I'll use the term. In the pre-market preps, the sequencing matters. If you're coming from a higher high on the hourly chart, you fail the breakout, I would still treat this as a potential area of support as long as the supporting evidence still looks good. Now, if they're just absolutely crushing semiconductors to the downside, if software is not getting a rotation bid and like, let's say utilities are leading the market to the upside, yeah, I might be a little bit more skeptical of this area, but I'm still looking for buyers to step up there first. Okay, so those are the base case paths. If we pull back a little bit more deeply, not unreasonable to still look for a higher low, but clearly not as strong as the other outcomes. This starts to become your problem. And then as just mentioned with the fibs and such, that is your bearish outcome underneath the 738.15. I think we've been pretty clear about what we're looking for here. Let's go back to the daily time scale. Let's quickly hit this with a Fibonacci extension measured move. So we'll come from the low of the breakout bar, which is here technically, up to the high, down to the pullback low. And what do we have as a 100% bull flag extension? We're talking about 770. Do I think the market's going to 770 in the blink of an eye? I mean, it could. We've had a decent history of breaking weekly expected moves. Not last week, but weeks prior to that. Yeah, we've been smashing the upper edge of the weekly expected move. I would say it's more probable than going to like the 50 SMA. Let's frame it that way. I would think the odds of getting here much higher than a huge Armageddon breakdown and we find ourselves at 697.84. Probably not going to happen, right? So that's kind of my base case. There's your measured move based on a Fibonacci pull. Let's quickly take a look at our internals. If you're not familiar with the market internals, check out the video tutorial in the top right hand corner. What do we see here? I mean, volume flows on Friday, even though the market produced that little end of day route to the downside, giving us that upper wick. not bad. I mean, we have volume inflows here. The advanced decline line remains strong. The index score a little bit weak. And as we'll see in just a moment, it's the RSP, it's the breadth expansion here that kept things kind of looking okay under the hood on Friday. I mean, look at your cumulative builds. It's technically positive, even though we closed that red inverted hammer. So a little bit of rejection action happening at the highs, but you can kind of thank some of the heavy hitters for that. NVIDIA, your top dog, down about 2.5% on that Friday session. Post earnings, it just can't really seem to get itself in gear. So that is a quick look at the dashboard here. I will just, we'll be a little bit flexible. Let's go RSP. Just want to show you this early. Again, this is not a bearish market where, oh my God, we're going to crash and burn when the RSP is breaking out through a flat top base high. Speaking to breadth expansion, right? And we've been talking about this narrative for a little while now, ever since rates kind of put in their low there with the Iran headlines sort of shifting. The IWM is a great example of this as well. Small caps closed green last week, whereas your heavyweight, S&P based on the based on NVIDIA and the components there, the Mag 7s, closed a little bit weaker, right? So breadth expansion, the other 493 companies are pulling some of the weight, as you can see here with this RSP breakout, which is supported by, once again, your market internals. This is when you look at this in hindsight, intraday, it's a confirmation gauge, but in hindsight, when you just analyze, okay, what was the day actually like? It really speaks to breadth. This is a breadth dashboard to some degree, right? Let's jump on over into our market profile and see what's going on with the ES over here. If you're not familiar with the market profile, check out the video tutorial in the top right-hand corner. What I love about this is we were slightly concerned about the ability, for sellers to topple the profile, so to speak, from Wednesday. And although we dipped underneath the value area low, look at where value shifted on the Thursday session, and then on Friday higher as well. Now, we talked about, for the most part, how that was a gap fill reversal. Buyers stayed over that Thursday high, but value as well. There's no chance that value is overlapping to down on Friday, which is technically a bullish indication. We do have a poor high at that high of day from Friday, and we did go back just a little, right to the point of control from this session over here. What would that have been from 2 Thursdays ago? Yeah, this was OPEX, so that would have been Thursday of 2 weeks ago, right? So that point of control is there. A repair of this poor high breaks that point of control, and I would just expect all-time high, right? Pretty straightforward, as we've already described on the daily chart, with our levels and situations to be looking for. So with the ES and the S&P 500 complete, let's go back on over here. Let's take a look at our NASDAQ side of the market. Let's bring this up to a weekly time scale. Let's throw on the clean drawing set and the moving average stack. Beautiful. So what do we have over here? Candle structure and location almost identical. You've got a little bit more of a classic hammer-esque style bar where the body's a little bit smaller than the S&P 500. You've got a much longer lower wick. Still implies the same thing, right? Buyers stepped up near the lows, able to push prices back up to the opening print, through the opening print for range expansion, strong close at the highs. Equal highs, equal lows, inside bar for the most part. We did flirt with slightly an overshoot of the previous week's low. Generally, the trend does not change. We have an inside bar, same outcomes as the S&P 500 from a weekly perspective. Either we Brigade bolt up and out to blue sky territories, we consolidate and remain bullish in a flag, or on the weekly chart, you take out the previous 2-week lows, technically Brigade bolt underneath it on a daily. That's fine. We know that there's plenty of room for the higher low. The arguments are basically a mirror image. Let's break out the Fibonacci from the bottom of the move up to the high. Again, this is an unchanged level, but in here around that 658, 657, 659 spot, let's call it, Fib 38.2, an awesome place for what would seem like an arbitrary higher low, but as we know on the daily, aligns with some structure, and this level is unchanged, close to about 639, 640. Let's take out, what do we want next? Maybe some VWAPs on the weekly. We do get a creeping higher from the low anchored VWAP of the move. Once again, watch out for some of the structure in here, and these 3 will start to play catch up with the top end of the range over the span of time. Same comments as the S&P. Let's jump into a volume profile just to be congruent here. You still have your big high volume shelf, as big as it can be after 2-3 weeks trading up here. It's right at the lows there of the 2-week balance. No real change in that analysis. Let's drop it on down to the daily time scale. Let's start by evaluating this week's expected move, of course, in the gray shaded box. What do we have here as we commit some chart crimes and make this a little bit easier on the eyes? There we go. We've got ourselves an expected move right here. We've got 732.80 on the top side, of course, a brand new all-time high, higher high in the trend count, and the low will be a nuanced higher low if contained at 702.28. Expected move strikes me as being bullish. What's going on here from a trend perspective? This, as we know, is a firm higher low. We did get the hourly downtrend we supported, looked below and failed the previous Tuesday low if you really want to split hairs by just a couple pennies, maybe $1. And for the most part, we have the same configuration as the S&P 500, so I will save you the time. You do have the inverted hammer. You're over the Thursday high. Your outcomes look like this: bullish consolidation, Brigade Bolt, blue sky territories. Pull back here, fine, daily high or low, consolidation, continuation. If you go look above and fail, you could short this underneath Friday's low. I would not overstay your welcome, or you could short it if you could spot the hourly lower high here underneath the previous all-time high. That would be at 722. You get short there. As a matter of fact, let's just go to the hourly, but before we go there, I will just take the time to hit the extension here on the daily. Let's go from, where is the, it's so, I'm going to pull from this low. It's the same level as what we had in the S&P from here to here. And our 100% extension would bring us up towards about 760, let's call it for round numbers sake, if this bull flag is going to go and give us a measured move from this flag post here. If you really wanted to get crazy and call this entire thing the bull flag, let's just like do something insane here for a second. Let's go from here to here. This would be incredibly shallow consolidation. 815, not in the cards for this week, but if you wanted to start thinking of that, heck, even as a weekly bull flag, right? If I just clear this up, bring this back to a weekly, I know that with all these levels it will look insane, but if you're like, this is the weekly high tight flag here, I mean, you're talking about a gigantic move in the upward direction. That's going to be even larger. That's at 863. Again, not talking about that this week. I'm just giving you some kind of an idea of what this measured move may look like if we do go sideways. Heck, if we pull back a little bit further, that could even be healthy for the weekly chart, right? Anyways, let's deal with what's in front of us right here, right now. We'll just drop this back to the daily and then tour over to the hourly. Great. Same concept, same pathing, excuse me, as the S&P 500. Slightly different numbers. So base case, right? Brigade Bolt, just like that. Awesome. You're off to the races. Pull back here, high or low, firm it up. Something that does this. Awesome. Same ideas. If this comes in, if you could find the lower high short here, let me break out the red crayon for just a moment. That's a red crayon, and as we've been doing with the pre-market preps, we'll put a white dot around it just to indicate its counter trend, right? When you get here, because of the sequencing, just like the S&P 500, this higher high can have the opportunity to pull back into a higher low. If this supports, great. Still bullish, hourly higher low, looking for follow through. The problems emerge when you do this. You're here, great, you pull back, the market looks to be okay, you're trying to rally, and then you reject this. If that's the case, now you have a lower high, and this low is the threat, equal low, and then I would imagine you're probably coming in here underneath the neckline of bears rejoice, pattern traders rejoice, the double top, the dastardly double top neckline right around 699.700. If you lose that, you're at least talking about a gap close in here, in my opinion. That would be closer to about 683. When and if we get there, we will have to reevaluate whether or not the weekly chart is able to provide a weekly higher low over what would once again seem like a quote-unquote arbitrary reference point that is extended through the lower bound of the expected move. It's not my base case. Once again, base cases, I'll do it one final time. I think we've beaten this horse to death. Sorry for the horse. This, great. If we do pull back here, that's fine. This still looks good. This, and then this, right? If we do get this, fine, you can short that in there. This would be a base case for higher, trying to buy that pullback off of 706, daily higher low. If this fails, this starts to become, I wish I had like a gray crayon handy. This is like no longer the base case. I think lower odds of getting this, and then this. Not impossible, but lower odds based on what I can see through the supporting evidence. That's the cues. Let's quickly hit this with an anchored VWAP stack for the intraday. You can see that we're over the stack, and once again, the most important VWAP to watch is the all-time high anchored VWAP. As long as we're above that, we're doing A-OK, and buyers aren't necessarily trapped. Think about it this way. Anybody who bought that Thursday bull flag up here, those buyers, believe it or not, like if they average down or whatever in here, those buyers actually feel fine. If they haven't stopped out already, which maybe they didn't because we hardly took out this low. Maybe they had to stop underneath the 20, who knows? But if those buyers are still involved, as of Friday's close, they might not feel great because of the reversal and rejection up here towards those highs, but they might not feel all that compelled to sell. They're probably like, okay, just kind of hanging out near break even. We need to deploy capital. The markets are bullish. And this all makes sense, right? Let's quickly hit this with a Fibonacci from the low pull of this up to the high. And what do we see here? 61.8, good confluence around that 706 level. Not so much with the Fib 38.2. I would primarily focus on that 714.65 level right here as your ideal spot for the higher low, right? It makes a ton of sense. Thursday's high, this low from that Thursday breakout, and this high from what would have been maybe a Monday. Was that Monday's session? Yeah, Monday back here, the 11th. Absolutely. All right, so it makes decent sense. A much stronger inflection point than looking for the Fib 38.2. Let's clear that up. Let's take a look over at the NASDAQ side of the market internals. what do we see over here? Once again, look at the breadth, staying positive here. I'd say a little bit more neutral through the cumulative build, but nothing that makes me think, oh my goodness, there's this secret hidden divergence at the exchange level where we need to duck and cover and it's going to become, super bearish. I'm not really seeing that as an argument. Here's the market profile. Let's jump on over to the NASDAQ side and let's take a look over here. Once again, let's focus on where our value went and the ability to topple the Wednesday session. Thursday, value was actually overlapping to down. That would have been an easier day to argue for a toppling, and it just didn't happen. So the fact that value is higher on Friday, point of control notably higher, and once again, value area on Friday is completely above the Thursday range. Buyers seem to be in control there. We'll see what this headline about Iran does for an open on the Tuesday morning session. We shall see. So NQ profile, it looks fine to me. You don't have as much of a poor high indication here as what you had in the S&P 500. Maybe lack of material excess, but not just a straight up poor high with two TPOs back to back. Let's go back on over to the platform here and let's finish up the broad market with, of course, a good look at the Rusty Russell. Let's see what's going on from a weekly perspective. Let's drop in our right study set and let's clean up the drawing set as always. Perfect. Look at this weekly bar. My goodness, what a thing of beauty. A lot of volatility in the Russell last week, primarily due to the interest rate volatility. Again, you could look at the MOVE index for bond volatility there. So the sensitivity is real, and the fact that rates screamed higher than screamed lower and kind of unwound a little bit looks kind of like a reflection here, right? We went lower, then we went higher. Now, I think that this is a great look because look at where the lower wick went. So, by the way, of course, candle structure and location, same indications, right? Look at how much more meaningful the lower wick is. We'll draw it into volume because why not? It just means that the buyers performed an even heavier lift to get prices back up to the open, and then, my God, forget about it. Through the opening print, big range expansion there. There's twice as much range that was traded. Think about the distance of the wick and then the body on top of it, right? Versus the NASDAQ where the body was a little bit smaller. Yeah, impressive from the buyers to retrace the wick, but they didn't necessarily go on to expand even further in the upward direction. So just a little bit of a psychological twist there on the candle structure. This is very bullish. Very, very bullish. Why could the sellers not achieve, after breaking a previous weekly low, why could not achieve, and we'll see this on the daily chart, a lower high here, pressure the level, and then, bears would be looking for that, right? A retracement of this move. It's not happening. This, to me, is a bull flag up here at the highs. Wick shows bullish, compelling evidence. Look below and fail of the previous weekly low. Closes back at the opening print of the previous weekly bar. Now we've got a 3-week equal high breakout point. Something that looks like that. Rock and roll. You're talking about new highs in small caps, which once again, the main reason for including this in the analysis is speaking to the breadth of the market. It is expanding here. It is not contracting. It is not deteriorating. It looks good as a supporting evidence data point. Let's come in here with some fibs. Let's come in from this low up to the all-time high. Look at that. The low wick of last week right over the fib 38.2 and the prior structure from off to the left. Makes sense. Let's jump in here with our anchored VWAP stack on the weekly. Whoa, would you look at that? Right to the anchored VWAP from the pullback low. Who would have thought? Let's come on in here with a volume profile. Where do we want to go? Studies. And let's go with the volume profile. And what do we see? Can it be so good? Not so good. We couldn't go 3 for 3 with the supporting evidence little tools there, but high volume node was protected and the low wick was well above the high volume node. So looking good from the IWM weekly perspective. Let's drop it on down to a daily chart. Let's take a look at the small caps. There we go. And what do we see? So let's commit some chart crimes. There we go. All right. Expected move, bullish, right? No doubt about it. Brand new all-time high up at 292.02, and then down here a higher low for sure relative to last week's low at 278.20. Looks pretty darn good to me there. You can see that we did produce, for all intents and purposes, roughly an equal high after suggesting an equal low. So the daily trend is actually neutralized here. You can't really have equal lows and equal highs and still call it an uptrend. You really call that a neutral trend. So two outcomes here keep us bullish on the small caps. Number one is a continuation play to set a higher high. That would be bullish just by the definition of an uptrend. Or if we pull back underneath Friday's low, that's fine. An ideal higher low would be here at the 20 SMA on the daily, 280.25. These low wicks as well as that high. This high here, holding over 280.25 supports the idea of a daily higher low over the 20 SMA. Then we start to suggest, okay, if that stays in play, higher lows coming into equal highs, what's that a recipe for? You could start to call it an ascending triangle, right? You get your higher lows, there's your little triangle picture. Great. Breakout Brigade Bolt over the all-time high looks good. Over 287.60. Bring on the blue sky territories. Show me the upper edge of the weekly expected move. Heck, there's even the possibility of a range double. Range double is when we have a daily balance range like this. You look for 2x that on the top side, and that would certainly suggest a little bit further north than 300, the round figure. That would be a potential bullish outcome here if this market can either go high or low, Brigade Bolt, continuation, pull back, higher low here, and then some sort of a follow-through move. I would only get bearish on the small caps. If we start to fail what level, it would be a pullback that then sets a lower high underneath, 277.60, the top end of this consolidation and congestion here, and then back to the low. That would be problematic. There's your double top. Heck, maybe the bears even start calling for some sort of a gnarly, I don't know, is that a Man Ray extension pattern? Who knows? At this point, double top, head and shoulders, a little bit of a stretch to me at that point. I like the idea of keeping it simple, stupid, the KISS method, as they say. Here's a balance range. Let's look for a higher low over the midpoint, ideally a Brigade Bolt, break out and go. And if we do violate the midpoint, lower highs underneath, the pressure's on at the bottom end of the range for a larger trend reversal. Once again, lower probabilities of this, unless I would say you got to keep an ear to the ground over the weekend, over the course of next week. If the Iran war escalates even further, rather than the de-escalations that we've seen, that would be problematic. As we know, crude, rates, that translates to small caps. Let's go on into, we could take a look at the hourly chart, but you're not going to hear me say anything other than what we've already talked about. You get your consolidation here, great, Brigade Bolt. You get your look above and fail because it's a higher high, this is still a higher low. Back to here, follow through, awesome. You get this, right? And you come into here, awesome. Hey, pullback, midpoint of the range. Can the buyer step up? Back to here, ideally we're through. Consolidation, Brigade Bolt, follow through. If we reject this and come back into it, this is where the alarm bells start going off. Once again, lower odds seemingly of that taking place, but 277.60 is your huckleberry. Let's hit this with a fib from the low up to this most recent high. Look at that. You can't ask for anything better. Fib 38.2 at the 280.25 level, and right here 61.8 in the neighborhood of that 277.60 confluence of support. Let's hit this with a intraday anchored VWAP stack, and you can see it. It's right there. As long as you're over that midpoint, you'll be respecting a majority of the anchored VWAPs, which is a bullish situation. Let's drop it on over into our Russell side of the market internals. What do we have here? Good volume flows, actually really strong volume flows, breadth expansion. AD line's not great, but it's not bearish. It's over the zero line. Pretty sloppy on the cumulative ticks down here, but again, nothing under the hood where I would say, oh my goodness, duck and cover, we've got this huge divergence. Let's jump on over to the Russell side of the market internals, see what we got going on over here. Give this a quick reset like that, and we've got ourselves value continuing to progress once again. There's your toppling ability on Thursday. Does not topple. Look at the extremely poor high repaired on Friday. We do now have a poor low. So one of the situations to be mindful of is just that pullback into the midpoint of the balance range could just be a repair of the poor low from Friday. We sweep it, come back up into range, and then we're off to the races. You can certainly see here that value has continued to progress in the upward direction. So a situation where like a period here of Thursday dips a toe lower, repairs the poor low, and then value is just overlapping on like a Tuesday or Wednesday session relative to that Friday value, that would be bullish, right? Maybe the profile looks like this. I'll do my best to sort of sketch this in. Here's all the meat of the value, and it was just a liquidation break off the open, giving you a little tail, and your value areas like here, for example, right? That would be a bullish situation as of early next week. So with that, let's get back on over to the platform here. Let's take a tour through our S&P sectors. This is where it gets a little bit more fun. Intermarket relationships, intermarket dynamics. Let's see exactly what's going on in the nooks and crannies of this market. So weekly performance looks like what? Who was losing, who was leading, who was losing, and where was the weight? I haven't said it in so long that it just kind of fried my brain there for a second. We've got healthcare up at the tippity top of the list, up 3.73% on the week, followed by software, impressive there. Real estate, not a shocker considering what's going on with rates. Utilities, I would say that the spread here, we've got some risk off sectors towards the top, healthcare and utilities, but we still see discretionary up over 2%, semiconductors nearly up 2%, financials up nearly 2%, 1.82, then tech up 1.5 roughly. So I would not call this an overly risk off look. I think it's a rotating market. We continue to see that. At the bottom of the barrel, Mag 7, a little bit of a tough spot there, noting some of the NVIDIA weakness post-earnings. You've got XLC and XLB. XLC is becoming a heavier weight risk-on sector, so I don't love to see that red by about 50 basis points this week, but as always, structure sort of rules all. Let's take a tour through some of these charts. How does the XLV look? Is it breaking out to new highs, being the leader? Not really. It led on the week, but it's not really doing anything here where I'm like, oh my God, this rally is entirely predicated on healthcare, duck and cover, that's defensive. Not really the case. Seems like a catch-up trade to me out of some sort of like, call that a quasi-weekly double bottom. Sure. Over the neckline here could have some more room to run, at least to this around 153.15. So upward pressure is upward pressure. If tech is pulling back and healthcare is breaking out, probably don't want to see the S&P 500 making new all-time highs. I would prefer to see it go sideways and offer up some digestion, sideways consolidation, build out the bull flag. Here's the IGV. This thing looks absolutely phenomenal. Ever since the break here and gap fill reversals in these low wicks, awesome over 88.10, continuing to look for the top side. Gap close and the 200 SMA are the main targets overhead, and then we'll reevaluate. Does it need to go sideways for a little bit, and then we're higher for another leg? Does it pull back and test this again, shake some people out, and then go? That would be the conversation when and if it happens, but into the coming weeks worth of trade, ideally equal highs, at least a gap close, if not the 200 SMA, and then we reevaluate from there. I would say this remains bullish for me as long as we're above this 88.10, no problems on that. Real estate, moving inverse to rates, of course. Rates came in, or up, I should say, then they came in. Not really that bad. This looks like just a bull flag to me. And the main idea here is going to continue to be the wealth effect, right? People feel like, okay, my home is still nice and valuable. And, it might be difficult to sell right now. It's not really a buyer's market with high rates, but prices, for now, at least in the local markets I track, I can't speak for all of the US, but prices are still buoyant, right? Prices are still technically up. That's real estate. And again, people who feel like their worth or the net worth is tied up in their home, it's not really like, whittling away and turning into nothing. It's not a 2008, right? So what do we see over here on the utility side? A little bit of a rebound over there. It's the lightweight sector. It's a lightweight sector. XLB is the lightest. Not concerned. Upward pressure just helps, buoyancy, rotation. It's not going to move the needle, but it's not a drag. Looking at the XLY, really impressive 3-day string in here. I would love to see this now that it's actually reclaimed the bottom end of the range, suggest a higher low, and then continue to look for the top end of the range. I'm really impressed. I got to give credit where credit is due. This had plenty of room to offer a lower high in here, then drop something like the 50. That would have been brutal, remembering that the XLY is heavyweight, it's risk on. The fact that this isn't happening to me just continues to speak to people want, exposure to the market, exposure to the risk on stuff. Let's look over at the SMH. Looks identical to the ES, the NQ. The broad market is, again, a mirror at this point of the SMH. So I'll save you the conversation. It's a bull flag on the high time frames. We know we're looking for a higher low. I'll leave it at that. I'll actually stick to my word and I won't beat the dead horse. XLF, really impressed with Wednesday. Gotta say, the support off the 50 SMA looks pretty good. As long as this range can remain intact and we're not breaking down through the gap and in here, I think we're doing okay on the XLF. Do I love the look of the chart? Not really, but financials are kind of split right now. You've got really great looks in select banks, and then the credit card processors are just like abysmal. Let's jump on over to XLK. And by the way, the XLF, for those who have not been following along the last little bit, it's no longer the second heaviest weight sector. You're kind of tied in here for second with comms, which is why we said earlier the XLC means a little bit more these days, right? So let's go back on over here. XLK, again, mirror image of the S&P and the NASDAQ. The difference here is that you actually set a higher high. You technically tried to break out there on the Friday session. Is it a failed breakout? I wouldn't consider it that. I would still give this thing plenty of leeway to close the gap and then go higher. I would give it leeway here for a daily higher low consolidation and go. The problems emerge when you drop the 20 and all of a sudden this high tight flag no longer looks like a high tight flag. All right, that's XLK. Let's go on over to the energy sector. God bless you with the market gods if you are trading this one, but too much whipsaw action, too much volatility, a headline here, a headline there. We've gone through this chart a number of times. It's probably reasonable that after a multi-year consolidation and a strong breakout, you probably have some form of continuation here. It's just very whippy, very, very reliant on the headlines right now. If you bought the breakout, you probably got stopped out in here. If you're using the moving average stack, maybe you're still involved in that, looking for a higher low. It's not the trade for me, so I'm going to refrain from commenting on a big bias, but the chart's at least not hurting the S&P 500 as an overall look. Let's go on over to industrials. Midpoint of the range. I don't see anything problematic here. It just is what it is. What is the rating actually, or weighting I should say, of industrials now? Still about 8%. Nice. So still up there in terms of, near that 10% mark. Okay, so industrials, no problems here. Midpoint of the range. We'll continue to watch Cat, John Deere, and Cummins. Johnson Controls, Honeywell can also fit that category, and GE. Not GEV, not GEHC, GE normal. Let's go on over to the XLP. Staples, higher low action happening in here. Nice support on the Thursday session. Jeez. Don't really mind this chart. It's not helping. It's not hurting. Doesn't look like risk off. kind of looks normal to me. It looks fine, looks healthy, looks normal. Let's go on over the Mag 7, taking a little bit of a breather here, a little bit more of that lower high. You can see the clear divergence from the broad market. Is this a head and shoulders? I mean, you could argue for it. I'm not going to get overly short biased on the Mag 7. I think that you could easily start to see some digestion, a support hold over 67, and then looking up from there. Which would be bullish, right? That's a weekly high or low after a very small short-term daily downtrend. Lower high, low, lower low. Small, short-lived daily downtrend, support over 67, the top of this flag. Then you just back off to the races, weekly high or low. Let's jump on over the XLC. I'm still trying to hold out on the thesis that if there's going to be a second leg, maybe Meta, I don't know what it's got to be, but Meta's got to turn it around. Google maybe needs a stronger breakout into all-time highs, but something through this would be incredibly bullish at some point in the future. Not a great compelling look on Friday, but also not really hurting much. Needs to break underneath 115 before I would become a little bit more concerned about the XLC. And honestly, take a look at your XLC, then take a look at your XLY, right? I don't want to say it's the same situation, but if you were to break the bottom end of the XLC range we just had up, the 200 SMA, the 50 SMA, and then snap right back above it, I don't think that would be unreasonable, right? At this point, it's a classic descending triangle. You can only knock on the door so many times before someone ultimately opens up, meaning lower. Maybe you come in, you go like partial gap fill reversal, reclaim of 115. I would be all over the long opportunities in the XLC components if that's the way this shakes out. Again, I don't know if that's how it happens, but that would be an opportunity that I would really pay very close attention to and get bullish on the communication companies. For those who are maybe unaware, you can go over here, just hit the XLC, right? We're talking about Meta, we're talking about Google. We're talking about, Take Two up there, GTA 6 coming to a household near you. Disney Sats is even up there, EchoStar. You've got your Netflix, Verizon team, you just go through the list. But primarily, your Meta and your Google are the ones that move the needle on the XLC, right? So once again, this kind of idea in here, that would be the inflection point over 115 where you get back on the horse. Let's go on over to the XLB. Nice breakdown here. It looks like the weaker version of the XLY, right? Obviously, completely disconnected in terms of what the sector actually represents, but some kind of a rejection in here, fine lower high. It's the lightest weight sector, not going to move the needle. It's a little bit of a headwind right now, but nothing that's overly problematic from what I can tell. Let's go on over into our ratio grid and see if we still have that narrow leadership. Of course, the survey says yes. Still looks that way in the XLK. And by the way, if you're not familiar with the ratios on Thinkorswim, check out the video tutorial in the top right-hand corner. You've still got yourself the narrow leadership to tech. You don't have financials really turning it around. XLC looks weak. XLY, it's trying to bounce, but I mean it's a squiggly X, honestly. You're underneath a declining 50 SMA there. You're still not full bore risk off. So, I'll give this a neutral look. I'll give this a neutral look. This is a neutral look. You're flattening down here, but you're not in a strong uptrend over the 50 SMA. So it's not a risk off look. It's just still narrow leadership. And this is nothing new. The market's been dealing with this for a number of weeks at this point. You can see the same thing here. All the tech and semiconductor related ratios look awesome. Your apples to apples discretionary and staples, a little bit more neutral. I don't think it's bad, right? It's technically a reclaim of an upward sloping 50, but really would like to see a break of that trend line there. Kathy just can't get it right. Her innovation ETF is not so innovative. Goodness. And our Russell 1000 growth value still looks okay. I mean, we've got to give it some credit where credit is due. A great breakout to a higher high, pulling back for a higher low. If it continues, still a risk on look. Let's go to the B set quickly and see what that has for us. I mean, just screaming to the top side on this gold ratio, which as we know, maybe this changes a little bit. If rates come down more meaningfully, then maybe the dollar softens a bit and gold will appreciate, right? So I'd pay attention from that perspective. I wouldn't just say like, oh my God, look at the gold ratio. It's coming back down. It's a big bearish tell. If it's primarily driven by the idea that rates are coming down, dollar softening, right? It's not a flight to safety. It's just a natural repricing of gold as a currency, right? If we look at the TLT, this ratio is like screaming risk on, like full bore risk on. You're getting steamrolled if you're stuck over in the TLT, primarily due to some of the gap downs from last week. In the group, we sold a bunch of TLT puts, started to harvest some profits on Friday. Bitcoin has been the laggard for sure. Just doesn't want to get in gear. This is kind of not a head scratcher to me, but maybe one of the last shoes to drop. If Bitcoin could start to ramp again, I mean, think about what that would do for risk appetite and sentiment. We're not there yet. Very close to a Sailor Shift tool flipping to red. This may turn into a failed breakout. I'd pay very close attention to that, but it's not going to be enough to sink the bull case. We know that Bitcoin, although important as a risk gauge, semiconductors and the AI trade are the narrative of the market right now. It's not crypto. It's not a financial revolution. Although some people are still talking about that. Tom Lee and his Ethereum rails. Maybe it's going to happen at some point in the future, but it is not the spirit of the times right now. If we look at the HG, copper, higher low in here. As long as that maintains a higher low, Dr. Copper's not really going to give us too much of a headache. I don't want to see a lower high that breaks down. That would be problematic against an S&P that's trying to break out. That's the white line here, by the way, that's trying to move higher. Let's go from our risk-off ABs over to the dollar and rate since we spoke about it enough, or a little bit, I should say. You're seeing your Dixie just go sideways here instead of continuing higher. Again, if this comes down, expect gold higher. It's not a flight to safety trade. It's primarily based on the idea that if rates come in because maybe crude oil comes down, that eases inflation expectations. We've had this conversation a number of times at this point, but I'll say it again. Kevin Warsh, having now officially been sworn in on Friday, he cannot hike interest rates to try to damper inflation if the problem is coming from the Strait of Hormuz. It's just, it would be absurd to think that an interest rate hike is going to have any influence over oil pricing based on the Strait. So that's not how that's going to play out. And therefore, watch your crude oil as the biggest thing, the biggest lever on interest rates right now. That's kind of like all it's got to be. Let's go on over here from the Dixie and such to the inverted ZT. Speaking of the Fed, still creeping higher here. We know that the projection of rate hikes is on the table. I don't know that that actually sticks. There's our Fed Watch tool. I don't know that this becomes a reality based on the comment I just made. You're not going to hike rates and cause inflation to come down if it's driven by energy over in the Strait of Hormuz. So that's kind of got to get straightened out, no pun intended, over there. And I wouldn't necessarily be a believer here. Maybe we're just higher for longer, but to imagine that the Fed hikes rates to try to do something about that, I don't think so. Let's go on over to our calendar here. Of course, we know that the market is closed on Monday. Pretty quiet, early start to the week. A couple of Fed speakers, PCE. I don't think the market cares too much about that. Always the CPI is the more sensitive one. Preliminary GDP could be interesting here, looking at a 2.1 as the forecast there. Jobless claims, the usual stuff on Thursday. Pretty quiet week as it relates to the economic calendar. A little bit of Fed speak sprinkled in there and the PCE. So primarily Thursday morning is what we care about. PCE, GDP. Outside of that, some Fed speak. And that's really it. Let's jump on over to the earnings calendar. What do we have this upcoming week? Zscaler captures my attention. First, Pony AI. Sure. That chart's been a little bit tough, but Zscaler, sure thing. What else? Modine, interesting. Data center cooling. We've also got, what else? Just kind of going through for the first time with you guys. Marvel, of course. I'm just going, column by column. So apologies if you're like, look at that one. Why are you not saying it? Yeah, I'm just going column by column. Snowflake. No, that's going to get an honorable mention, honestly. Snow over here. Synopsis, honorable mention. HPQ, honorable mention like that. That's kind of, is Everpure, is PSTG, Pure Storage, now Everpure? It looks like the same exact logo. I might have to look that up in a minute here. Anyways, that's that. What else do we have here? Not Best Buy. P Labs, definitely interested in P Lab. We'll look out for, that's it there. I mean, Futu, obviously, with the recent catalyst, the Chinese regulation, Futu and Tiger, TIGR. We've got Dell, absolutely. We've got MongoDB, maybe. It's not really the right storage, it's databasing, not really like, Micron and SanDisk. Costco, interesting there. Sentinel, absolutely. Huge move in those cyber names. NTAP, huge winner for the group with the big move on Friday. I mean, you just have to be in the right spot at the right time. And that's kind of it. That's what we got there, right? So that's the calendar, slowing down post NVIDIA earnings. Speaking of, what do we have from this? I just wanted to focus on this for a moment, and this just aligns with the breadth expansion narrative. Posted the same image over on X, but you can see here the green bars represent the 493 other companies outside the Mag 7. You just sort of illustrate that the earnings numbers are actually catching up, right? I don't mind so much that your Mag 7s are a little bit all over the place. It's the fact that the other companies are becoming more profitable there with their earnings growth. Right, so that looks pretty good. That speaks to a healthy, more well-rounded market versus, through the trough of 2022 when rates got hiked to sort of combat inflation, right? That was like, oh, you're really choking out those companies. We've seen them bounce back. So that to me looks pretty darn good here. That was the main illustration. We can always scroll down to the very bottom just to illustrate. I know this scrolling is probably a little painful on the eyes, but we just want to get to the main chart. of the earnings estimates and forecasts. Where is it? It's the line chart. I know it's in here. It's coming up next. There it is. Continuing to see really strong earnings estimates for the S&P 500 calendar year 26 and 27. Bottom up continues to move in the upward direction rather than being revised in the downward direction. Now, is this going to last forever? I don't know about forever, but the sort of back pocket idea, let's go on down to our forward PEs. There we go. The back pocket idea would be earnings are totally driving the market right now. These earnings are just bonkers, right? We're not even seeing a PE expansion. Yeah, maybe a little bit off the dead low in here. But for the most part, this PE is not even close to what we had coming out of the sickness lows, right? There's room here to be even more optimistic. If, like, let's just say that the CL gets straightened out, the Strait of Hormuz gets all straightened out, then we have a PE expansion on top of that as the 10-year eases. Are you kidding me? That's like adding fuel to a fire. So I just don't really understand the argument for like, oh, this is like the dot-com bubble. None of these companies actually have earnings. It's like, well, if you actually look at the data, it might not be the most wise comment to make. With that, let's get back on in my lane. I won't sort of overlap with the fundamentalists too much. Let's take a look at our bond impulses. You can see the unwind in this inflation expectation breakout. Really, really strong look there. If this ultimately drops the 50 SMA, bulls on parade, your 10 years probably going to come down more meaningfully based on expectations there. Credit spreads continue to move in the downward direction, which is bullish, telling us that we do have a risk-on appetite environment. Let's go to the HYG, breaking the trend line in here. There was a very clear shift in tone, primarily on, was it Thursday or Wednesday session? One of those 2 days, I can't remember exactly which, but very clear shift in tone where HYG high yield junk started to rally alongside the market, which is something we haven't seen in a while, right? This was just like, oh, geez, bearish divergence. Like the bears have this one data point. We can't seem to turn it. Well, as of the end of the week, starting a little bit of a breakout here in the HYG technically aligns a bit more with the bulls. Let's go from HYG to total breadth and see what's going on here. We'll full screen each of these panes. Breadth expansion. I've been saying it. I've been saying it. I've been saying it. The data supports it. The data supports it. The data supports it. You can argue with me in the comments all you want, but I'm just going to point to this and say, okay, what's your data point? Right? Moving average charts moving in the upward direction. New highs versus lows staying positive rather than rotating negative. You got the RSP breaking out over the flat top base. If you think all of this stuff's going to fail, then that's fine, but I'm just going to trade price. Like if the QQQE looks like this, and it was the first to go actually on Wednesday, it was the first little tell. If the QQQE is doing this, there's room for a higher low. I don't want to hear it on a pullback. Right? If the RSP, on the other hand, starts to look like this, and we're here, okay, I'll pay attention, then I'll probably change my tone when and if we do that. Right? So just let price tell you. Why bother like trying to be contrarian before the signal's actually there? Anyway, it is what it is. I think we've hit all the supporting evidence before volatility. Yes, let's jump on into the VIX. Melting here on the Friday session. That looks A-OK. That's bullish for risk appetite. VVIX, volatility of volatility, creeping lower. We will hit the complacency effect at some point, and as we've sort of done in the past, maybe I'll do a Bollinger Band with study on that at some point and tell you what the number is to pay attention to. But for now, I'll keep that sort of close to the chest, if you will. VIX futures. This is updated, by the way, for the VIX roll. We had a VIX expiration on Wednesday. Still in strong contangos here, and the one-day VIX looking A-OK, filtered in the upward direction there. Let's jump on into what we do best, which of course is the core list of companies, some simple technical analysis. NVIDIA, ouch. Not the worst thing in the world. What I would watch for here is still some semblance of a daily higher low. I'd love to see a wick through the 20. I was even watching for this on the intraday on Friday. We started to do it in the morning, just could not quite reclaim. I've updated this level. It used to be, I think, 216 something. But now that we've clearly established a new resistance, it's worth pointing that out. 218.37. Who let that fly? My goodness, somebody, who's not paying attention in the office? 218.35, much better. So a little look below and fail on the 20, then back above that level would be a long entry point for me. Looking for some upside, just treating this as a daily higher low in the trend count after, again, knockout earnings. We've been talking about this concept a little bit. Your NVIDIA probably turns into the Apple of the semiconductor names. And, your new high flyers, the ARMs of the world, the Marvels of the world might take the sort of seat. AMD, even right now, might take the seat as the new top dogs, just in terms of percentage change. NVIDIA is still going to be the greatest of all time, as they say. The kids might say the GOAT. The options, volume is deep and wide. You can find anything anywhere across the chain. So it's still an awesome trading instrument. But in terms of the movement, and not for nothing, this has been like a stellar move. But it probably just starts to trade a little bit more like the Apples of the world versus your Marvel and your ARM. Anyway, 20 SMA hold, probably gone on too long about this, but 218.35 looks good. Breakdown underneath that, and you're probably talking about 208. Would still be open-minded for a higher low there. It just becomes a little bit more complicated on the backside. Let's jump on into Apple. Speaking of the devil, just ripping to new all-time highs. What an excellent move really out of Apple here, breaking this bull flag, continuing for a 2-day rally there after the breakout. It's just vertical on the hourly. So I think it's very straightforward. Hourly higher low pullback here. Anything over 303.25 goes. Set the higher low, seek continuation in the upward direction. Where does it fail? Probably back down underneath the flag lows. You know, if you get this, maybe that's a little bit problematic as well. You could start looking for it early underneath 303.25. Jumping on over to Microsoft, it was just one of the worst charts in the market. Actually, it's not so bad. You may or may not have noticed. We've done a little bit of reorganization of the core list of companies. Probably one of the worst price action charts has been removed, Palantir. So Microsoft just can't get its butt in gear. I think it's fine inside this consolidation. It's getting tight. It's not going to get tight and go sideways for forever. So there will be a move at some point to either do this. There will be a move to do this. Something will happen here, but the price action over the last week and a half has just been brutal. I don't really think that this is a top watch for me right now until we actually get up and over either 430.50, or if we start to break down and out underneath 412, maybe we have some gaps to close and repair to the downside. For now, yeah, sure. It looks a little bit double top-esque, and we are not even close to acting like a leader here on Microsoft. Maybe a little bit more of a short bias from that perspective, but you could counter that by just saying, okay, it's in the software group. IGV doesn't look half bad. Maybe this is a higher low. It goes either way. Let's go on over to Amazon. Amazon, I think, looks fine. A little bit of a pullback on the Friday session. Nothing wrong, though. This is an inside resting day, over the 50% mark of Thursday's break. So any consolidation here that then just goes up and out over about 269.50 looks like a breakout to me. Here it is on the hourly chart. I mean, heck, pattern traders rejoice. There you go, right? Over the neckline there, and you're probably off to the races towards the all-time high. So consolidation here is great. This gets you going. If you dip a toe deeper, kind of have to hold the shoulder mark. 262.50, you start breaking down through that. You got thin structure here. I would expect at least an equal test of these lows, closer to the previous all-time high at 258.25. That would kind of ruin the reversal setup on the hourly chart, right? If you're in here and you're just noodling around, you're not really talking about an hourly uptrend reversal anymore. Let's go back to daily charts. Let's hit Google. A little disappointed with this one, but I think it's going to offer a great trading opportunity. I thought that it would have been a decent look for a look below and fail on the 20 SMA to get in gear on Friday. It just couldn't do it on the Friday session over 386. That's fine. I think this is going to be a tradable opportunity to the downside. Thin structure underneath 381. Retrace this. You can see it on the hourly as clear as day. Do you want to start calling this head and shoulders? Is this your neckline? Maybe. I just think regardless of whatever you want to call it, and that's the thing about patterns, like who cares about semantics? The idea is to just follow trend. This is a lower high. If you break this, you have lower lows, right? The trend remains down and there's nothing here, right? This is thin structure support. I'm not saying it needs to close the gap, but I do think that we could easily start to see some shorts fire off under 381 towards about 365.75, Now, on the contrary here, if you sweep this level and immediately come back above, the market's telling you something loud and clear. It's telling you that sellers don't have the guts and the glory to take this thing lower, and buyers continue to want more shares. So thus, what would be the trade from there? Wash out of the 20, find whatever the hammer high is, depending on how this thing closes or whatever. Let's say it looks like that. You wick below it. Over the hammer high, it's still a long, right? Just like it was a long back over here and, thinking about it reclaiming the prior day's highs, it's going to be a long after sweeping it again and failing to go lower. So I'm interested in either way on Google, but just show me this resolution. I think there's something doable here early on in the week. Looks much better than a Microsoft, for example, which, speaking of charts that look horrible, Broadcom, scratch, do whatever you want with this chart. For me, there's nothing to do here. It's inside this range until we're either doing this to repair the gap and then maybe a 50 SMA hold, or until we're doing this and threatening a range high break. Nothing to do. It's a heavyweight component for the S&P 500, so we'll continue to watch it. It's going to stay on the core list, but tradable action, forget about it in this balance range. Let's go on over to the metaverse. Metaverse, look below and fail. Fine, right? Worked out a little bit in here, so congrats on that one. And I just think in the midpoint of the range with an inverted hammer, patience for the next move. Either you're still long from the look below and fail, targeting the true top end of the range, or we're flat and we just say, okay, this into the earnings gap, this back below and into the lower gap, which is 592 down to 575.15. That's it on the metaverse. Jumping on over to Tesla, what do we have here? We've got ourselves a series of higher lows, a very sloppy higher low in my opinion. I totally see it as a hammer, but look at how loose and wide the price action is. It didn't really tighten up in any of these instances, unless you just kind of like trusted the level, bought it here, bought the reclaim of the 200 SMA. unless you did one of those things, it's really been a bit fickle to get involved in a Tesla. So I still see this as being wide and loose, not really tightening up for clean entries. But, what are we doing with it? It's probably not a top priority. If we pull back in support for a higher low incrementally over the moving average stack, maybe that's a buy. If you're like, no, I think this is a short on a head and shoulders here that then does this, I could totally understand that as well. Lower high still on the table as a potential move there. So kind of take it or leave it on Tesla. I don't see the daily chart as being clean. I would absolutely acknowledge the uptrend. I mean, it would be silly not to. The entry tactic doesn't really seem like it's there right now. Too loose, too wide on the actual price action itself. JP Morgan for financials, keeping the pulse. Lower high in here, possible. I think for now, I want to remain a little bit more optimistic and see if this can play catch up with the other beasts like Morgan Stanley ripping to a new high, as well as GS, Goldman Sachs, right? Don't bring up Wells Fargo. This one sucks. Don't bring up a Visa. Don't bring up a MasterCard. But JPM, seeing if it can't. This was a little odd to me, right? We know that lawsuit maybe can't. I don't know if that has anything to do with the way that the stock is being priced over here, if it was something just a bit more natural in terms of market movement. But it seems a little odd to me that your JP Morgan, kind of top dog there, isn't hanging with the Goldman Sachs of the world trying to break out into new highs, or a Morgan Stanley of the world breaking out to new highs. Even a Citibank is like not half bad up here, pulling back gently. Wells Fargo, I wouldn't really lump that in with the big group. But anyway, those are my 2 cents on JP Morgan. Doesn't look bad. Want to try to remain a little bit more optimistic for the big banks. By the way, speaking of banks, this is not an additional idea, but it's just I'm reminded of this from what we saw intraday. Pretty nice action here, getting tight on regional banks. If that could break, I think there's a trade in regional banks over that inside day high. It's a bullish 3-bar play towards the top of the balance at 71. So 69.50s to 71. There's, what is that? 1.5 to potentially be trading for. Maybe something on KRE just came to mind as we're talking about JPM. All right, now you'll notice that we've reordered a little bit of the core list of companies. We've removed Palantir. I'm not saying Palantir is dead and gone and the company is worthless and it's going to zero. That's not the intent. It's just not really offering tradable action right now, and Intel is knocking it out of the park. I think consistently for the last 3 weeks, Intel has been the top volume leader on, not dollar volume, but volume leader in terms of number of shares in the pre-market for the last 3 weeks straight. So Intel absolutely deserves a spot here. It is heavyweight in the S&P 500, or at least heavy enough weight. If we go on over the spiders, you could see, if I just make sure we could see them all. There it is, Intel, 17. Where's Palantir on this list? That's right, it's not there. So not ashamed to boot that and keep this an ever-evolving list, keeping up with the times, and Intel is there. We'll get to it in a moment, but again, MU, AMD, Intel, kind of the newer kids on the block, looks really good. MU, what do we have? Inverted hammer on the Friday session, a little bit more weak to one of, it's a trade idea, but I'll just bring it up now. More weak relative to this SanDisk. Like SanDisk didn't break the high, it's just a resting bar after a really impressive day on Thursday. I think SanDisk is a 3-bar play for a long, up and over that high to blue skies, if not just an equal all-time high. That'll be a watch. But getting back on over to MU for the core list, I think it's possible to maybe see a pullback here. Then you get some range compression, right? Some range compression. You pull back, you still support the 20, you build this wedge out, and then do we get the breakout of a century? When MU breaks from like a weekly high tight flag after another week sideways, some sort of a pre-earnings, we go sideways for another week. Let's say that's next week. And then the week after that, we do this, we tighten up further, and then boom, pre-earnings rally before mid-June. I mean, I'm totally being speculative here. I'm not saying it has to happen that way, but this has been a monster move. You're kind of looking for something similar in here. This one, of course, shook out and then went, but are we going to get another phase where there's some sideways? Go, tradable range in here, fine. And then in the future, rip, right? Maybe on MU. We'll see. We continue to hear that memory is a constraint over and over and over. All the earnings calls, memory is a constraint, right? So that's MU. AMD, what's over here? AMD, a little tired, right? Really nice move from the what would have been Tuesday, Wednesday, Thursday follow-up. They gapped it up overnight. A little unfortunate there, rather than giving us an open in range for a 2-day high breakout point to the top. But nonetheless, great movement out of the chart, and just looking for a gap fill reversal, some kind of a higher low in here, tighten up, and then go out to blue skies. That would be fantastic. If this does pull in and you're looking for a short, is it doable as a potential short into the gap? Sure. I just wouldn't overstay my welcome on an AMD short side move. We're no longer extended in a big way from the 50 SMA. I know the number is still 11 ATRs, but the earnings gap up does that. We've gone sideways long enough where I think you've got digestion. It's not like you're shorting this thing. Let's go. I mean, dare I bring it up? ARM. ARM, just massive extension, 12 ATRs from the moving average. This is different, right? Because you've been 4 or 5 days up strong and now you're extended. If you look for some backside, I wouldn't call you insane. AMD is not the same thing. Like, hopefully we can all see and agree, right? AMD, like, quote unquote, extended from the 50 SMA here is not the same as ARM. Maybe the first go around, right? This, maybe, but after a week or two of sideways and then trying to go, not the same. So I wouldn't be aggressive with the shorts. I would primarily scout the higher lows, consolidation, and then go. What's the narrative here? Jensen laid it out pretty clearly in the earnings conference call. CPU, right? Agentic AI, CPU, AMD has a huge chunk. Intel has a huge chunk. Speaking of CPU, here it is, honorable induction into the core list of companies. Let me know down below if you like Intel. The other one that was really strong in the runnings was going to be an NBIS, right? NBIS, new Neo Cloud, probably the strongest of the group there. I would have been a little bit more of a proponent for Oracle, but let me know your thoughts in the comments section down below. Intel, NBIS, Oracle. To me, Intel, really, really optionable. Deep options chain. It's been trading fantastic. It's treated us really well in the group the last span of weeks. So anyways, Intel. What else is going on here? In terms of just, I don't, this wouldn't have fit the category as like an additional trade idea, but now that it's on the core list, we'll cover it. I think you're just looking for the same thing as what we talked about on MU really, which is some compression here after a really impressive move. You could digest, you've seen a nice little pullback here. You're starting to break that bull flag, right? So just continued sideways that then Brigade bolts towards the highs. Intraday moves like that look great to me. If you do pull back, you ideally just want to keep shakeout lows over the 20 SMA and continue to keep it moving forward. If this is going to get weak, where's the flush point? It's got to be underneath these lows, which primarily come from that breakout point. It's the psych number, $100. If Intel loses 100, now you've got a lower high double top on the daily. You're under the neckline. That would be problematic. That's not a base case, right? As of right now, tightening up in terms of price action here. Can we get some sideways? Does it give us an entry point like up and out of that range? That would be the primary focus. That's Intel. Let's move on into these core list of from the core list into the trade ideas, the additional ones. APLD, let's take a look at some of these crypto miners turned cloud names, data centers, I should say. You get your APLD as an inside bar. I kind of like this. I would have liked it more if we got a bid into the close on Friday, but I still like the 2-day equal highs gap and go on the catalyst. There's two ways to play this. Either you remain inside and then you Brigade bolt out to highs, or this pulls back in here, it tests the gap, supports over 4160, and then you're higher from there on a daily higher low, right? Maybe the low wick looks like that. It's a partial gap close. You buy the high of that bar, target the equal high stop here underneath the gap fill, right? So that's like one way to get involved in an APLD. Looks really good. I mean, this comes in a group of a few. One of the other ones that I thought was set up well was BTDR, for folks who maybe want something a little bit cheaper. But take a look at this, right? Rounded cup with handle right in here. You could call it inverted head and shoulders. Call it whatever you want to call it. Again, let's not get hung up on semantics. But 1510, very well defined. Nice tight action. After a nice move higher, you've got a series of higher lows, very clean, thin structure to retrace. I mean, that's the golden goose right over there. BTDR, Cypher fits the category. Doesn't look as good to me. I still think it's playable. And then HUT, of course, in the category as well. A little bit wonky. It would have been a better inside day if we could have closed just literally inside on that Friday session. So, HUT, take it or leave it there on that one. Let's jump on into an NBIS. Speaking of NBIS, it's going to just exist in our universe for a while. Inside day on Friday, love that. Gap fill reversal. I've gotten decent clips on other stuff. I haven't gotten a decent clip out of this cloud sector. So Neo Cloud NBIS, I'm waiting for it. I'm trying to find the right entry on it. I've kind of struggled with that for a little bit. But if we could go gap fill reversal here, I'm interested. I'm interested in finding my way into an NBIS. I think I just have to keep reminding myself, yes, this is the nice first leg out of the base, but this is like leg one. If this is going to be a TML, true market leader, it should have many, many, many legs in it. It can go sideways here for a couple of weeks. It could try again. It could shake the 20. It could come back up. It could do it, right? There's a number of ways to get involved. I'm trying to remind myself that it's still early enough in a earnings, quarterly sequence that, it's going to offer more entries. So NBIS, still interested. Love the inside day on Friday. Gap fill reversal, something back up towards the highs. We'll see if we can do it. NBIS. Let's go on over to, we talked about SanDisk a little bit already, but we'll do it again. SanDisk, right? This is an additional trade idea. Over this high, just interested for a 3-bar play to the all-time high. Fantastic. Right around, what, 1600? What is the high of that bar? 1600 on the dot. Look at this little window right there that says H. That's high. 1600, high of the bar. So big psych number there. Love that. As long as it's over 1430, this breakout set high looks really good on SanDisk. Let's jump on over to, we're going to save the most interesting for last, but let's go on over to the quants, IONQ. The reason I wanted to bring these up is just because, of course, we did see that big headline about the awards and the partnerships. It's catching really big volume. It's squeezing to the top side. I don't know that this is just a blind long right here at this high, but this is an illustration of, number one, speculative money still flowing around the market and really getting excited and interesting here. You're not going to be going out there and buying IONQ if you're worried about a recession and, oh my God, the Fed's going to hike rates and this unprofitable company is going to get absolutely smashed. I mean, look at the earnings, right? Came in negative 34 cents from negative 20 cents over here. You could go look at a Brigade. Right, Brigade's doing the same thing. Bigger volume on Brigade. I do like this chart a little bit better just because this flat top shelf has not been broken yet. Sideways and tight in here and then go, probably more actionable than an IONQ, which is already above this area, right? In here, you're kind of looking for the higher low above rather than the initial breakout. And then, of course, QBTS is the other one, D-Wave. This could easily tighten up in here. Also, great volume. IBM, interesting, right? Probably the more stable of the companies. And by the way, my take on quantum has always been that Google, Microsoft, the big names, with all of the heavyweight firepower, so to speak, they'll win the quantum race. They'll just buy up whatever company is, the closest to doing it. And then, if not paired with their own efforts, they'll be the ones that win in quantum. It won't be these little crapcos. This is all speculative. That's my 2 cents. Do with that what you will. Anyways, IBM, excuse me, unable to hold the breakout over the 257. So I still think you could tighten up in here, find a higher low and build something out. And then here, maybe that's where it gets in gear. IBM, a little bit more optionable than those other names. Not great, though. If we go to the trade tab, just open this up. Let's go to a quick volume open interest. I mean, a little thin on some of the call side. You would think with big catalysts like that going on, you'd think that there'd be a little bit more volume and open interest here. It's more doable, though, than, your IONQ. What's this looking like? Actually, I might take it back. I may take it back. Looking okay over here on IONQ. How about Brigade? RGTI, how are we making out? Yeah, sure. Not too bad. Open interest a little light there. I would not go with any of these half strikes, but the full strikes, at the money 26, 11,000 contracts at a $2 price point. I mean, that's not bad. That's like an Apple on some strikes, right? So anyhow, that's the quantum set. Those are interesting. The volume and the catalyst makes it worth paying attention to. Keep your eyes on those quants. And then the last one that I thought was interesting, MO, Altria, some cigarettes. Consumer staple, I suppose, right? I believe it's in that category, but look at how tight this action is. That's the main point. So after a huge run up off these lows, V-shaped reversal off the lows, to get this tight on an MO, I don't know. Maybe there's some potential here for a Brigade bolt out of it. And do we just go up and away? Shout out Doug. He was all over it in the group earlier. Great eye looking for something to happen here. And I think it's possible that now that it's gone sideways for 4 sessions, all inside bars, it's probably actionable. And I could honestly see you saying either way. If you want to go up and out like that, fine, bull flag breakout. If you want to go down and out for a 20 SMA shake, I could see that also. So it's tight enough where you could trade this in either direction out of this little range. All right, that's MO. You're probably not doing that with options. That's for darn sure. Look over here, pretty rough, right? Pretty rough, 60 cent, 30 cent options with only 230 contracts traded on the call side. Put side, really rough as well. You're probably not trading that with options, right? So just use shares here. It's easy to borrow. Probably no problems borrowing it on any marginable account. MO, just looking at that tight range. So that's what I've got for you in today's episode and installation of the not pre-market prep, but rather the weekly watch list. If you enjoyed the video or learned anything new, let me know down below in the comments section or by giving the video a very simple thumbs up. As always, the market will be, or not as always, but the market will be, I should say, this upcoming Monday closed for Memorial Day. Hopefully you guys can enjoy your long weekend. Remember what this is all about ultimately. Take, a minute to think about that. And as always, we'll be here on Tuesday morning for another episode and installation of the pre-market prep, kicking off at 8 a.m. Eastern time, as we typically do. Hope to see you up in the office. Have yourself an awesome weekend. Stay green this week. And as always, I will see you in the next one.